Well, hello, Flawless family. It is I, Tierra Walker Holloway, Walker One Property Group.
And Diane Stein, Southern Trust Mortgage, residential loan officer.
Awesome. And we're back again with another awesome episode of Home Buyer and Seller Tips with Tierra and Diane. So you guys, we haven't seen you in a while. We've definitely been a little bit since we did a market update. So we wanted to come to you as we're now solidly in the fourth quarter because in planning for our new year and our upcoming plans for 2023, we definitely want to end the year strong. So we wanted to come out to the market and talk to you guys about some of the things that we've been dealing with our clients, mostly buyer and seller fears as confronted by the media, as confronted by real-time data and facts, because we're going to bring the facts, okay? We're going to laugh and we're bringing the facts. And so we wanted to come to you today and just kind of talk to you guys about some of the things we're seeing that are affecting our Hampton Roads market as it relates to real estate sales and buyers, and of course, the mortgage update. So now we always need to know where's our money coming from. And so we're going to start off with Diane giving us a great market update and most importantly, confronting and overcoming some of those fears that a lot of buyers are having. What are you seeing mostly about that, Diane?
I think a lot of people that are out of the market right now are more the first-time home buyers, that they were getting so used to those mid-2s and low-3 interest rates, and they're just it's just not realistic anymore. And so they've just lost their buying power. So the people that are buying now are the people that can afford the little bit of the higher interest rates. But the thought process here is, if you can handle the mortgage payment, you're comfortable with that mortgage payment, don't hesitate on buying right now, because your money is still better in the market in buying than it is if you were renting. It's a better bang for the buck right now. But you just have to make sure we stay focused on keeping credit scores up and income up and everything else like that, so that as soon as when the market turns a little bit, we can focus on refinancing. And so that's mainly the counseling that I'm doing right now, more about easing people's minds. And Tierra will go over more about how with the higher interest rates, now sellers aren't seeing as many offers. So it is a good time for people to still buy. You just have to watch the interest rates. It's a little more volatile market right now, It's easing up a little bit. We've seen some number indices at the end of the week last week and this week. The Fed is more than likely, they pretty much said it, that they are going to raise another 75 basis points coming out on November 2nd, which is already baked. This is already baked into the interest rates already, though. So, but what you're seeing a difference in right now, though, is some of the Fed chairmen chairpeople are coming out and saying, you know what, we haven't let inflation catch up with us raising that interest rate. So now a lot of them, it's probably like 3 or 4 of them, are having conversations with the news media and everything else that, hey, we may need to let back it down a little bit and not raise 75 basis points every time. So it's looking like maybe come December that during that chair meeting, that Fed meeting, that they probably will only be raising 50 basis points, and to let it kind of catch up. You can see some housing numbers change. Also too is 30% of the inflation numbers component, 30% of that is shelter. That includes new home sales, resale sales, and rent. And so those take about a month and a half to 2 months longer to catch up with the numbers than the labor markets and the CPI index and all those other numbers that come into play. So those numbers haven't quite caught up yet, and Tierra will go over into the numbers of a lot of how things have changed, since the summertime on the market. And so as soon as those numbers start reporting, people put an offer in on a house, take 30 to 45 days to close, then those things then get reported. So it's a little bit of a lag time. So that's where the Fed is saying, hey, maybe we're not giving it enough time to catch up yet. We don't want to raise too high and push into that recession. We may see a recession next year. It's still on the fence. Some people are saying yes, some people are saying no. But it may just be a lighter recession. However, what is indicated by a lot of people that are higher ups in the mortgage business that specialize in this, that we're probably going to keep seeing this volatility until, through December. And then come January, that's like, you can see it on the charts. You can just watch the charts. Come January is where that stability looks like it's going to come into play. And come maybe March, April-ish, that's what it's looking like. We might see rates back down to the 5-ish rate. We're not going to see it back down to that mid 2s, upper 2s again. I mean, not in the very near future, but in case another crisis comes around. But, COVID just changed things, and different things changed things. The market changed. So it was just a perfect storm to get those rates. That's not a realistic rate coming up in the future. So if you can handle that 5%-ish rate, and that's where you feel like your target is to refinance, which is lower than the average rate over the last 30 years in our history of keeping track of rates. I think it's like 7.1% is the average. So we're kind of at the average right now. It's really not all that high. It is high comparable, but compared to what we have had. So we understand that it was a quick rip Band-Aid off for the rates to go up so high. But we really are at that average point, and we'll probably dip back down. So if that's a comfort zone for you, that 5% rate, it still isn't a bad idea to buy now and refinance in 6 months when rates jump back down. That's what I'm counseling most of my people who are purchasing now, or people who are looking. We're still getting a lot of applications in. It's the market's still moving a little bit.
No.
Yeah.
And one thing for sure is that really the market is pretty. This is the thing, is that I read, and I was actually pulling it up again while we're here talking, because I wanted to make sure that I gave the accurate data, okay? But like I told you guys when we talked back in July, when we did our summer edition of the updates, when I first came into the market as a agent, of course, most agents come in as a buyer's agent. So, of course, I came in as a buyer's agent, a first-time home buyer agent, and rates at that time, back in 2005, 2006, 2007, were solidly between 6 and 9%. I mean, that was pretty much average. Then, of course, we had the fallout, the mortgage crisis. Mortgage interest rates went down, down, down. I have friends to this day that were able to take advantage of refinancing their primary homes then. I know some people that were able to get as low as 2%. 1.9 for super high. I mean, that are still paying those low interest rates and locked in. So that is the primary reason for the pullback. The pullback is a combination of, number one, we have basically the same amount of houses on the market in the last 7 days that sold last month. So that already shows that our inventory is highly limited. So that's going to limit, and we're actually in the fourth quarter, but we're in the winter. Sales normally do slow down. That doesn't mean that houses don't sell. Houses sell all times of the year. Houses sell in any situation, recession, not recession, pullbacks or not. People always need a number one primary requirement for living is shelter. You need somewhere to live. So you figure that it's not even about it being better than mortgage. It's about what your long-term goals are. Better than rent. It's about what your long-term goals are for your family. What type of legacy, what type of equity, and what type of assets you want to create for your family and for yourself. So you figure that anything that you're determined to get is going to require some discipline. At some point, you're going to have to determine if you want to be a homeowner and you're not currently a homeowner, do you want to be a homeowner? And one of those things is sitting down with a realtor and speaking with someone that has ideas and knows about the market and has knowledge and information of the market, and making a succinct plan on how you can purchase no matter the market. Because no matter what, you're going to spend some money out of pocket, whether it be a little or a lot. And with your mortgage payment, like I tell so many people coming from renting, it's pretty much like your mortgage payment is still, especially in this current market with rent having went up 19% in the past year here in Virginia, okay? You figure that at 19 to 30% actually in Hampton Roads, just depending, okay? Because we have some places that were renting last year for $14.50 that are now renting for $17 to $18.50. I mean, that's a huge difference, especially in the Virginia Beach properties. The price increase is quite a bit because of the lack of available housing and affordable housing for people if they are needing to move where sellers are placing their homes on the market. So you figure that there are a lot of great areas there. However, the reality is that no matter what, it's always going to be a good time to buy. Now, on the other side, with sellers, here's the thing, is that a lot of sellers are seeing at this point that properties are staying longer on market because, just like Diane said, that the interest rates have gotten higher. So for people that were anticipating the 5s and 6s and then coming into the market where we're in mid 6s, mid 5s, there is options for paying down points. We are seeing sellers to buyers giving more concessions so that they can pay down points and or pay towards closing costs. So that is slightly returning. But like Diane said, the market is just continuously leveling off from all of the up and down we've had since. Here's the thing though. People think we're saying since 2020. No, since 2008, 2010. So everything that we're dealing with now are the remnants of the housing market crash, the super low interest rates, and then smack on top of that the pandemic where everyone was panicked and all the financial markets went crazy. And now here we are leveling and stabling back off to a traditional American market, which normally mortgage rates fall between 6 and 10%. And that's just the reality of it. Here in Virginia, I want to tell you guys, and I'm going to pull it up really quick so I can make sure I say okay. So basically what they're saying is, and this was an article published by the Real Estate Information Network, they are still, no matter what organizations you belong to, I still solidly support RAIN for the amount of positive information that they give to agents and brokers to be able to properly assist their clients at the fingertips. And basically the 30-year fixed mortgage rate for Freddie Mac consistently has been 6.70. Okay, and another thing is that 68.2 of all the homeowners in Virginia have a mortgage rate of 87 of the 68.2 homes. I'm sorry, of the 68.2 homeowners, that is the amount of homeowners in the state of Virginia. So in the state of Virginia, 68.2% of people have a mortgage. Okay, so let's start with that. 87.3 of those 68.2% of people in the state of Virginia have a mortgage rate that is under 5%. What does that mean to you as a buyer? That means that if a seller who is wanting to buy a home is now trading up, not only in getting a larger home, a larger mortgage, and a higher mortgage rate, they are not keeping their properties on market as long, anticipating that 5% rate returning, as Diane mentioned, in March and April of next year. Right now, we're seeing an equal amount of withdrawals and withdrawn homes over 60-day or right at the 60-day mark as a result of this. Is because sellers are also watching the markets while their properties are on market. And I'm talking about beautiful homes. We're not just talking about fixer-uppers. As a matter of fact, that business is swift. Investment property sales have increased by 23.5% since August. So the reality is that investment properties and fixer-uppers, because as we're anticipating a recession, those who are prepared to purchase. And so you figure that those properties have actually increased in sales, whereas traditional standard homes on market for sale have kind of leveled off. And as you know, sellers are not getting as much offers. It's not even about the house. It's always going to be concerning the interest rates, the points. And because of that, now here's the big thing. Because of those higher interest rates, as we just said, and as I'm going to always say, it's always a good time to buy. People always need shelter, okay? We know that. That's hands down. But your buyers, knowing that the market is correcting and leveling off, are being way more disciplined and determined to get exactly what they want.
It's outside of that frenzy. There's no more of that frenzy where people are like, oh, I'm just going to buy it because
Right.
it's out there.
We are coming back to a time where buyers are getting exactly almost what they want. So that's the reality of it, is that if this particular buyer is not a match for your home, or your home does not find a match, it's going to come more down to the small differences. The differences of, let me tell you something. Some clients, if you have carpet, might not come. Some clients, if you have the flooring, might not come. Why is that? because in a different market, you have standardly a bit of money left to do repairs with a higher interest rate or updates, because not necessarily repairs. We're talking about move-in ready homes. So you may decide, oh, okay, yes, normally when you purchase, you're going to paint anyway. So that's normally a budget you've already prepared for. But flooring, where it's something that is, last year you would have said, okay, I'm going to get this house, we got to get this house, and I'll go ahead and finance the flooring, I'll do that. People are not wanting to double finance the upgrades. They're wanting to purchase what they want from the beginning so that they can level off in that mortgage payment for a few years or a few months, whatever they determine with their lender, and then refinance, or even better, build true equity as the market ebbs and flows, and then over those years make the updates they want. But they want what they want now. I'm seeing a lot with the buyers where they are coming out and they're seeing the houses on photos, and then when they get in and they see that those cabinets are not quite the height or that bathroom is not quite the space, they are passing. So that is what's happening. That's really what's happening, is that buyers are wanting to find homes that match them much better than, especially in the frenzy. I mean, people were loving the houses, but also feeling the group think of, ooh, I gotta get the house, as opposed to now, yes, they still have to get a house. Shelter is a primary concern. As an American, we all need somewhere to live, okay? But the reality is that if it's not what they want, they're gonna pass, and they can wait. And they're not really seeing the difference between rent and mortgage in that case. Because if they're in a place that they know they can't do any updates to anyway, then why move to a place where they still can't do any updates? Do you see what I'm saying? So I hope that makes sense to you guys.
Absolutely.
So what else, Diane? Do we have any other things to wrap it up for them? I mean, we definitely will be coming back to talk to you guys some more before the end of the year. But we just wanted to jump in and give you guys kind of like just some real life examples and let you know what's really happening in our market right now. So anything else we have left to add, Diane?
There's still programs out there for first-time home buyers, still programs out there to get free money, but pretty much now you're going to need some sort of money, because a lot of times you're required to pay points. You don't even have an option to not pay them. Mm-hmm. So I think that's one thing that is a big deal right now, in that sellers are coming to the table with some closing costs these days. It's a lot more now than it was a couple months ago.
Absolutely.
However, you are going to probably still need to pay your closing costs, if not part of them, and probably end up having to pay some discount points and, of course, your home inspection and all that. So, but there are grant programs still out there for first-time home buyers for specialty jobs, medical.
Please remind them about community partner program.
Yes.
Please remind
and that they still have money. They held off. So the Community Partners Program is medical, and it's income based. So if you're medical, if you're a doctor making $250,000 a year, this is not the program for you. This is for anybody in the medical field. You could be an administrator. You could work you could be a janitor at the hospital. You don't have to be a medical person. Teachers, any education, fire, rescue, police, any of those, military, retired or active duty. There are grant money still available for those people, and it's some are $10,000 grant. There's also a first-time home buyer, and that is $7,500. There is money still available, and it can go towards paying down points, and it can go towards closing costs, not just like a regular down payment assistance program like Virginia Housing. So there are still options out there, but you still need to be prepared that if you got $100 in your bank account, we probably need to work on some savings. So, but
Absolutely.
We also do we also counsel people on doing planning for the future. So we're happy to help out with that as well.
Right, and then another thing that I see so much that is almost not happening as often, I see with the change in the market, is like we were just talking about, and like she was just saying, no matter what, if you determine that you want to own a home or own property, residential property, please don't forget about your credit. Continue to work on your credit. The higher your credit, the less debt that you carry, usable good debt we're talking about, that you carry on your total debt to income, is going to help you to have, no matter what, the optimal rate that is available. Okay.
And I think they changed the rules until through the end of this year. Now you can still go to myfreecreditreport.com and get your free credit score. It used to be you can only get it once a year. During COVID, you could get it every day. You can now go in and retrieve it. I think you can get it once a week now. So you can continue to go in and check your credit without having to ding your credit at all.
Okay.
So it's called
That's good information.
freecreditreport.com. So that's still in the mix. And they'll probably extend it past this year, but I know it's 100% extended through this year right now.
Okay.
So, yeah.
So please definitely go and check your credit. And then, of course, at Southern Trust, Diane, so humble, never wants to mention this. But not only do they have the Community Partners Program, they also have a credit specialist.
Yes.
Now, as you know, I have come out before saying I do not believe in credit repair. There's no such thing. However, with a credit specialist, which is a free option to you once you complete your mortgage application to begin the process of becoming qualified, whether that's tomorrow or 362 days from now, okay? You still have the option because we are here to support you and your family's goals no matter the time. We will still be licensed, we will still be knowledgeable, and we will still be about you reaching your goals. When you complete that mortgage application, their credit specialist over the next 5 to 7 business days will return back to you an actual credit recommendations form that shows you everything that you can do to get your credit to the optimal place in order to purchase with the optimal rate. Do you need to save? Yes, you do. Like I tell people all the time when they sit down for our trademarked and amazing free buyer consult, we actually let them know that I would rather have it and not need it than need it and not have it.
And this is where we go back to from the beginning, though, that sometimes you buy a house and you may want new blinds and new drapes and new rug and a new sofa and all those things. It's better to have that money, as that backup just in case, or paint the house or do all those things.
Right.
Those little things that make a house a home that you can't do when you rent.
Right. And another thing is exactly because if you're able with the optimal credit, right, optimal credit score, and you're able to save even a few thousand, that is just a small nest egg in that emergency fund. That's a small nest egg towards some other goals that you and your family, or you as an individual buyer, single woman or man, no matter company, no matter what, when you are purchasing, you want to begin putting yourself on a path to assets and attaining assets. And so with sellers, another thing I wanted to mention too is that I've seen that, as a matter of fact, in the last week, they've had, in the last 7 days, there has been a high increase of reductions, over 400 reductions in the last 7 days. Now, what does that mean to you as a seller? What that means is that right now...
It's a reduction in sales price.
Exactly, reduction in sales price. And so with that reduction in sales price, thank you, Diane, for clarifying. Right, I'm thinking...
Well, I don't want anything. We're talking about rates.
Right. No. We're not talking about interest rates this time. We're talking about reduction in sales price for my sellers. And I've seen that a lot of reductions have been occurring because, of course, you want to get your home sold. And so because of that, we know that market value is determined by the buyer. What I would say is definitely work with a trusted realtor that is going to continue to watch the market in your neighborhood and in your area and the true comparables to your home, and also continue to market your property no matter how long it's on the market. I know that sometimes as a home sits on the market for standardly, because now in our market, depending on the neighborhood, we're seeing anywhere from 21 to 54 days as average market time. Now, are there houses still selling in 2 to 3 days over the weekend? Absolutely. Most likely in the most sought after neighborhoods and in newer construction. So newer constructions are selling really quick and they're always going to be hot for a qualified buyer. And then you're going to have homes that are resales and that have been maybe rehabbed or very well maintained. Average market time is about 21 to 54 days. So in the course of that time, always be considering for yourself as well to start that buying process and start looking for a home so that you don't get caught in the middle of higher interest rates for both you and the buyer of your house, and now everything falls apart. So make sure you stay in tandem with your realtor and getting the right advice. guys, if I can help you or our team, because we do have a new agent. We have we have Count on Candace with us. You can check her out at Count on Candace on IG Live. Of course, we still have Tamika with us, our first-time home buyer and our new home sales specialist. And we're here to help. You can check us out at walker1propertygroup.com or reach us directly at 757-320-1946. Again, that's 757-320-1946. Now, Diane, anything else? Because, of course, our info will be below.
Yes. No, I think I'm good. I think I went through my spiel today. But, we don't have a crystal ball, so, hopefully rates will, dive back down. And so, but it's anticipated that it's going to ease up and be a lot more stable come January through March. So we're looking forward to that. So I'm sure everybody else is too.
Absolutely. Well, we definitely appreciate you guys tuning in today for another episode of Home Buyer and Seller Tips with Tierra and Diane. We are going to keep bringing you great real-time information about the Hampton Roads real estate market and mortgage markets and nationwide, because we keep our eyes all around in order to bring you the best possible information for you and your family to reach your goals. Thank you.
Thank you.